Today, we're going to talk about Bitcoin and why I continue to like a bounce from the $40,000 area, but I'm going to show you something in today's video that I have not shown before, so you're going to want to stick around. Now, if you guys are enjoying this content, be sure to subscribe to the channel and also click that bell icon so that you get notifications every time I post these videos. All right, so Bitcoin daily time frame, guys, looking back to 2021, we have talked about this at length recently, where every time that Bitcoin puts in these liquidation candles, and I'm just going to recap this before we get to something totally new today. Okay, so if you haven't seen recent videos, this is what we've been focused on for the past few weeks. Ever since Bitcoin put in that liquidation wick at $42,000, this is what we've been eyeing. So since the start of 2021, every time Bitcoin puts in a liquidation candle, where you get a lot of liquidations in a single session, you then get a lot of demand later in the session, so you get that long lower wick. Okay, every time Bitcoin has done this since the start of 2021, we tend to get a move just below that liquidation low before the bounce. Okay, so it's happened every single time we've seen this, and so far here is the liquidation candle. Okay, right here at 42,000, we've seen Bitcoin move just below that, and so now we're waiting to see, does this play out the same way it has every other time, where we get an average bounce of 63%, the lowest one back here being 27%. Okay, so are we going to get something similar here from Bitcoin over the next few weeks? That's what we're waiting to find out. Now, today I want to talk about something a little bit different, and that is $35,000. So in the event that we do not see Bitcoin hold at 40,000 and we see it close below that $40,000 level, where could Bitcoin be going? Because I think a lot of people right now are saying, okay, if we do break below 40, this area through here, then it's logical to see Bitcoin trend down here toward 30,000. This was the big support area back here in 2021. It's my belief, though, that if we were to see a move below 40,000, which I'm not saying is likely, but if we were to get it, that move would be front run. Okay, it would actually bounce from an area just above $30,000 that I'm going to show you in today's video. Okay, so the very first thing I want to show you, and we've actually looked at this trend line before, but if you anchor a trend line off of the high from the bear market. Okay, so this was the bear market. This was the previous cycle high back here in late 2017. We then have the high from the bear market. So anchor a trend line off of that high and connect it with these lows in June and July, right around $29,000. So you can see where Bitcoin bounced from this level twice through here. So that's how we connect this level. And looking at December 2020, what you'll notice is that this trend line was also significant through here. So it served as resistance before Bitcoin broke out and went on another run. Now, if we look and see where this lines up, you can see where this trend line down here lines up sometime later this month, somewhere around $36,000. Now, keep in mind that I'm not saying that Bitcoin is going to test $36,000. What I'm saying is that if we do test that area, we have this trend line to look at. Now, you guys know that I like to find areas of confluence. So for me, a lot of people would stop with this trend line and say, okay, 36,000 is support if 40,000 breaks. But I don't like to stop there because I like to find areas of confluence where two or more factors line up. So it could be a trend line, it could be a horizontal level, it could be a moving average, it could be a Fibonacci retracement level, which I'm going to show you right now. So these areas of confluence give you more confidence in a particular area on the chart. So looking at this range here, we know that this is obviously significant from March 2020 up to the all-time high. All right, so if we draw our fibs from this area, so from March 2020 low all the way up to the all-time high, right around 69,000. Okay, so we get our Fibonacci retracement levels based on that range. Now, the problem with this is, if you look back here, you can see where some of these were significant. This was a little bit of a pivot through here. This one kind of ran right through that consolidation. But the problem here is that you don't know which one of these is going to be significant. Okay, so what I like to do here is take it one step further and find confluence within Fibonacci retracements. The way to do that is find multiple significant waves. Okay, so we've mapped out this one. We know that that's significant. The next most significant range here, or wave, is this one right here that Bitcoin basically traded within throughout 2021. So from this area around 29,000 all the way up to the all-time high. So what we can do is we can move in here and map out our Fibonacci retracements from this low down here at 29,000 all the way up to the all-time high. So if we do that, you're going to notice immediately that we have some overlap in multiple areas. So you can see here, this is the 236 of this larger range from March 2020 up to the all-time high. We also have the 786 right here, and both of these overlap. Okay, they're not close, they literally overlap. And notice where they come in, right here around $35,000. Now remember, this is our trend line off of that high from the bear market that comes in right around 36. So right now we have this area around 35 to 36,000 that is a confluence of support. Now let's also talk about this for a moment, because you may have seen that we also have some overlap here. So the 1618 extension lines up with the 50%, and the 2618 down here lines up with the 786. Now, one thing I really want to hit home here is that this does not mean that Bitcoin is likely to move to these areas. The same thing goes for 35,000. Just because you find an area of confluence, it does not mean that the market is likely to move there. So all that this means is that 35,000 is a significant area, and the same goes for each one of these. So this does not mean that Bitcoin is going to go back towards 16 or 17,000. It certainly doesn't mean that we're going back towards 7,000. So in this case, we have an overlap here at 35. All right, so Fibonacci's overlap here along with the trend line. Now, the next thing I want to talk about, and these are levels I've actually had on my chart before, but I do want to reiterate this. So we've had a short-term downtrend ever since the all-time high up here at 69. Now, if we mark these lows here, okay, and we draw a level up here toward these highs, you can see that really ever since November, this market has been moving within a descending channel. Now, these highs up here don't really match up, okay, so this doesn't really work. However, since these highs back here, you can see where Bitcoin has really just been moving in this descending channel. So it triggered the bounce back here right around $40,000. And notice where the bottom of this channel comes in down here around 36. So once again, doesn't mean that Bitcoin is going to move that low, but if it does, we now have this channel support down here. We have our trend line off of the bear market high, and we also have our two key fib levels that all line up right between $35,000 and $36,000. Now, if all of that's not enough, we also have the VPVR, which I've talked about before. And what this indicator shows you is the volume by price. Okay, so let me see if I can get all of this on here so we can see the price action as well. Okay, so you can see here that Bitcoin has spent the most time in terms of volume on the chart up here in this area, and also between $30,000 and $40,000. So typically when you see volume at the bottom of a chart down here, this shows you volume by time. So if you're looking at a daily time frame, each bar will tell you how much volume occurred within that day. In the case of VPVR, or visible range, this shows you the amount of volume that traded within a particular price in the market. And that's significant because markets remember this stuff. And by the way, guys, if you do have a paid version of TradingView, you already have access to this. So if you go under indicators and search for VPVR or visible range, you're going to come up with this indicator. So if we look here, we can see that this is by far the largest area of volume for Bitcoin over the past 12 months. So this means that in terms of volume, Bitcoin has traded the most between $30,000 and $40,000, which makes sense because of all of this price action back here. Now, it doesn't really help us too much because obviously 30 to 40,000 is a huge range. But what I want you to focus on is look at this area right here where it's the most significant within this area. Okay, so between 30 and 40, the most volume traded at 35 or maybe just below it. So once again, we have our trend line off of the high from the bear market. We have the bottom of this descending channel. We have our two key Fibonacci levels, and we also have the most volume traded right around $35,000 over the last 12 months. So this gives you a huge confluence of support for Bitcoin, to where I think that if we were to see Bitcoin take out 40,000, which I'm not saying is likely, I'm not saying Bitcoin is likely to move to 35, but if we were to see that, my opinion is we're not going to see $30,000, at least not without a significant bounce from $35,000. So let's go ahead and clean this up a little bit and talk about how to play this, okay? And it's not financial advice, it never is. But I do want to share with you how I'm playing this, and I've been talking about this now for weeks, so it's really nothing new, but it is a recap. Okay, so what I've been saying ever since we had the liquidation low back here at 42, ever since Bitcoin was back here, I was saying that I had bids placed all the way from 42 all the way down toward 35 just in case. The reason 35 is what I'm showing you today. Okay, this is why I've had this area on my chart. And it's also why I've had bids placed between this entire area. Now, I did have a lot of bids fill between 40 and 42 because this is the area that I was really watching for a bounce, okay? But we don't know where this market is going to bottom. We don't know where any market is going to really go. All we can do is come up with probabilities of where the market is likely to bounce. So what I can say based on what I showed you today and what I've shown you over the past few weeks is that this area between 35 and 40, okay, continues to be an area that is likely to produce a bounce here. So what a lot of people end up doing is they try to nail the bottom. They try to nail this bottom here, or they say, okay, I'm going to buy at 38, or, you know, it's going to bottom right here today, so I'm going to buy there and try to nail that very bottom. And a lot of those people are using leverage too. And I want to point this out that I'm not using leverage. This is all within a spot account. Okay, so what I do, instead of trying to nail the bottom, because I don't know where the bottom is going to be, nobody does, I end up putting orders within a specific area. Okay, so if I'm targeting between 35 and 42, I'm going to put orders throughout that entire area. Because let's just assume for a moment that Bitcoin ends up testing this area down here around 35,000. So if it does test this and you've been buying all the way from 42 all the way down toward 35, and let's just assume that you have equal orders set throughout that area, then your average entry price is 38,500. If you can get in down here at 38,500 and the market bounces from this area like I think it will, okay, based on everything we've seen, and we get that move up toward 45, 46, potentially 50 to 53 that I've been talking about, then, I mean, that's a great entry. Even if you have some drawdown down here toward 35, like I said, you're not going to nail the bottom. If you do nail the bottom, it's a once in a lifetime thing because it's very rare, especially in crypto where it's so volatile. But if you can nail a 38,500 entry price and you see drawdown down toward 35 and then you get the bounce, then I think that's a great entry. And furthermore, you have a very clear invalidation level here. If the market were to take out 40 and move down toward 35 and then close below this area, then that could invalidate it. Now, of course, that could be a fake out as well, but you know, now we're getting ahead of ourselves. But you have a very clear invalidation area down here at 35 in order to scale into a long position, which again, for me, I'm only using spot, I'm not using leverage. So I think it makes a lot of sense to dollar cost average in this way, rather than trying to pick the exact bottom, trying to nail the exact bottom and think that you're going to get it to, you know, within $10 or something like that with a market as volatile as Bitcoin. So, you know, this is just how I'm playing it, guys. I do still have my long position on from between 40 and 42. And like I've been saying all the way back here, I've been saying this shortly after that December 4th candle, that I've had orders all the way down toward 35, and I still have those orders just in case. So if the market does move that low, I will be averaging down within a spot account for that potential move up toward 45 to 46 and potentially 50 to 53. Okay, guys, so I hope that you found this helpful. And let me know in the comments too how you guys are trading this. Are you buying Bitcoin here? Are you waiting for lower prices? Let me know in the comments and I'll be sure to get back to you. So I hope you guys found this video helpful. If you did, be sure to subscribe to the channel and click that bell icon, smash the like button, and remember, don't forget to leave your comment below. I will talk to you guys again tomorrow.